For more, we are joined by Nomura Securities Global Communications Equipment Analyst Stuart Jeffrey. Stuart, by the way, has a neutral rating on RIM. And Stuart, do you agree with some of the analysts that say that this takeover talk is overblown?
Well, if we look back in history over the last 10, 12 years, we've only seen two big acquisitions in the handset space. The first was Siemens Mobile by BenQ, and that folded within a few quarters. And then more recently, we've seen Palm being bought by HP, but that was for the software rather than the hardware. Historically, there hasn't been any real interest in buying handset companies because once they start falling, it's very hard to arrest that decline.
Is that the primary reason why those acquisitions don't work?
Once the product cycle is wrong, it tends to take 2 years more to turn it around. And that's based purely historically on a hardware basis. Now you've got the extra complication of improved software and building apps and developer support around those operating systems. And that's very, very hard to turn around.
You mentioned Hewlett-Packard and Palm. How is that going?
Well, they've announced their first phones just recently. Again, there's some hardware constraints with it in terms of people not being totally excited by that product. And so it's unlikely that that's going to be taking significant amounts of market share, in our view.
For RIM itself, I mean, other than the fact that, the other acquisitions have not gone well, why wouldn't an acquisition of RIM go well?
Well, the challenge for RIM is that it's got a sort of a unique service capability in messaging. And the problem it has to do now is to provide that messaging service onto a modern, up-to-date operating system. And it's taking time for them to do that themselves. And so the question is whether or not there's enough time for them to migrate it to their new QNX operating system, or whether, in fact, they need to port that onto, say, the Microsoft operating system or onto Android. And no one's entirely sure just how easy or how quick that kind of porting could be.
I mean, Betty, you've got some big strategic issues here right now. People talk about, well, maybe a private equity firm might come in, but what private equity tends to do is buy a company where they can cut costs, not a company that needs to really change how it thinks about business overall.
Right, and so then the question is, if it's not a takeover, then what is going to drive the shareholder value at RIM?
Well, the best case scenario is that management come out with a really good piece of software next year called QNX on their smartphones, and that gradually stabilizes their position and gives them a smaller market share than they've enjoyed, but at least they have long-term capability to survive. The worst case is that the same thing happens to them as has happened to Motorola or to Sony Ericsson over the years, or to any of the other sort of other handset companies that have had close to 10% market share and gradually fallen away to next to nothing.
Is that why you're neutral on the stock? You're on the fence with them?
We've got so long term we're pretty negative, I guess, on the outlook for RIM. But in the near term, they do have some products coming out. They've got a very old product portfolio just now. And in the second half of their fiscal year, we're going to see a product refresh, and that could drive some short-term support.
In the meantime, do you think we're going to see a change in the talk coming from management? They really haven't publicly addressed this being as a concern. Only recently, some small comments on that.
Well, they made a big effort to present a united front on their earnings call. Both of them were on, and they did a nice talk about how important each other were to driving the company.
Which confused investors even more, though.
Well, it's they're in a difficult situation. They were late to understand the way the industry was moving. They've tried to make those changes, and it looks as if those changes have just come too late to really arrest the long-term decline. And parachuting somebody else into that position, for example, is immensely difficult because it does take time. You see it, Nokia, Elop has come in, and the stock is down 50% since he's come in. So just swapping the management team doesn't provide a quick fix.
But do you think that these two guys, Lazaridis and Balsley, have what it takes to step aside if they need to for the good of the company?
I couldn't answer on their part as to whether they'd make that kind of decision. They've done phenomenally successfully so far over the last 10 years, but their expertise was in messaging in bandwidth-constrained networks. And right now, the industry is totally different. It's about developer support on multimedia, consumer-centric devices, and whether or not the organization can learn that lesson quickly enough, and whether even a new CEO can change the organizational structure and thinking quickly enough. That's to be seen at both Nokia and at RIM, and at the moment, the prospects look a little bit bleak.
They do. A little bit. Stuart, thank you so much. Really appreciate you joining us. Stuart Jeffrey of Nomura Securities, and also, of course, to John.